Hi, I'm Average Joe. Welcome to my channel. I'm average Chinese, average guy, normal guy living in the bottom of the society in China. I will show you the real China, share you the real information about what's happening in the China and what is the average Chinese think about the current hot spot of the focus on the situations, the news about the things around the world or in the domestic China. So welcome to subscribe the channel and to avoid missing future update. Okay, so today I will still keep on the news about the Luckin Coffee's financial fraud allegations. What's the impact to the Chinese listed company in the U.S. stock market? So the Luckin mess, the Luckin Coffee's mess. So I think it's unlikely to spawn new U.S. sales off. So the financial fraud allegations against several high-profile Chinese firms are unlikely to trigger a spate of short selling in U.S.-listed Chinese stocks. Experts said on Thursday. So the Luckin Coffee Inc.'s fraud has cast a shadow on U.S.-listed Chinese firms in less than a week after the Nasdaq-listed coffee chain admitted short seller Muddy Waters' accusation of sales data fabrication. Another Chinese company traded on Nasdaq, iQIYI Inc., has been accused of fraud. A short seller report published by Wolfpack Research on Tuesday alleged that video streaming platform iQIYI had inflated its 2019 revenue by approximately 8 billion yuan, which means 1.13 billion US dollar, to 13 billion yuan, or by 27% to 44.7%. The TAL Education Group, a New York-listed Chinese tutoring service provider, also reported inflated sales hours before Wednesday's opening bell. A routine internal audit found an employee fabricating sales of light class services, which accounted for about 3% to 4% of the firm's revenue, the company said. The iQIYI shares rose by 3.22% on Tuesday, but fell by 4.57% on Wednesday to close at 16.51 per share. On Wednesday, TAL saw its shares fall by 6.74% to 52.0006 US dollar. Another US-listed Chinese education stock, GSX, Techedu Inc., also registered losses this week. The company recently reported a tenfold growth in earnings for 2019, but a short sale report in February questioned its financial integrity. So, a general manager of Guangdong Fund Investment Co. Limited, the director, who said Luckin Coffee's fraud has sparked investors' concern over the authenticity of Chinese firms' reporting practices and made it easier for short selling, which can partially account for the timing of the allegation against iQIYI. Meanwhile, TAL may have chosen to proactively disclose the flaw in sales reporting to help safeguard its reputation as financial reporting integrity has been in the spotlight after Luckin Coffee's fraud. So look ahead. The possibility of having considerably more such reports against U.S.-listed Chinese firms is low, the director said, citing the pool of targets should be limited, given that many U.S.-listed Chinese firms saw lukewarm market performance. Financial reporting quality of overseas listed Chinese firms has improved substantially in recent years. It is nearly impossible to see a rather large batch of Chinese firms face short sale attacks as we saw in 2010 and 2011, said the director of the Finance and Security Institute at Wuhan University of Science and Technology. That said, he still urged the U.S. listed Chinese firms to strengthen financial reporting compliance and eradicate misconduct that takes advantage of differences in accounting standards between the two countries or loophole in supervision cooperation. Experts also called for Chinese firms to address the doubts by giving more detailed explanation and more open in terms of data disclosure. So long-term harm to corporations' reputation can be avoided by openly disclosing and taking remedial action for problems that are discovered in the firm's financial reporting, said by a global co-chair of white-collar security litigation with a global law firm. So the 4 disclosures have the effect of rebuilding confidence in the capital market, he said, adding that Chinese firms should continue to strengthen and test their internal controls for financial reporting. The manager directing of Beijing-based Credit Ease Wealth Management, the manager in that company, who said that the recent incidents of financial fraud will put pressure on US-listed Chinese firms in the short term, but the pressure should be temporary. He said, while firms with solid fundamentals and reliable financial reporting will ride out the pressure, which means that the guys still feel confident that this is a temporary impact to the Chinese firms which are listed in the U.S. stock market, because of the many firms with solid fundamentals and reliable financial reporting will riding out the pressure in the long run. So as you up to now, that the Luckin Coffee's fraud fabrication of the reporting, financial reporting, which has had a bad impact to the bad impression of the companies which impact other listed company in the U.S. But this is a temporary impact for the long run because of the strong fundamentals of these high-profile companies, and they will recover the confidence of the investors. Okay, so do you have any comments? And if you have any comments, just leave it comments down below, and I will read each comment and get back to you soon. And welcome to subscribe the channel and to avoid missing future update. Thank you for watching, and stay safe, stay safe and peace. See you next time. Bye bye.